According to officials, Uganda's GDP, which stands at around $38 billion US, fell by 1.6% in July. Analysts blame this on an overhang of the COVID-19 impact, as well as fuel and commodity prices inspired by the Ukraine war. This shock has significantly affected businesses, which largely fund revenue collection by the tax body URA, but which until the last quarter registered shortfalls.
For instance, if somebody is selling goods or producing manufacturing, it would mean that if they are manufacturing like 100 pieces, perhaps now they are manufacturing 98 pieces. So the two that are reduced mean that is what accounts for what we call the reduction in the GDP growth.
Parliament's Committee on Finance was last week scheduled to meet Finance Ministry officials to explain measures to soothe the economy hardships that affected various government departments and ministries. According to Francis Chisirinya, the Chief Membership Officer at Private Sector Foundation Uganda, one of the solutions to this is the private sector, which is suffering from the strenuous grip of the tax collector.
I cannot say that businesses are going to die because they are paying taxes, or because there is a lot of aggression. The thing that happens is that if the current methods are distracting the businesses from the work of generating more money, and they are attending to agency notices, they are attending to investigations, they are attending to audits, and also money that they could be plowing back into the businesses is going to the government. So that creates a problem. Now, if there is a bit of reduction, a bit of relaxation, it means business people can focus on their businesses, some of the money can be recouped into their businesses, and that gives them a better chance of surviving in this bad situation.
Government is now implementing expenditure reductions to be able to fund public projects, but this may cost some businesses too.
So the implication to the business people is that they are going to start seeing those that had contracts with the government, contracts being reduced, being postponed, and in some bad cases you'll be seeing domestic areas going up, but you also be seeing companies failing to meet the obligations. Perhaps maybe there might be a delay in paying their own suppliers, but also paying the obligations like with the banks. So those implications are going to be there because of the reduction. But having said that,
the Private Sector Foundation thinks government reduction on key expenses to further lower aggressiveness on taxation and clearing tax arrears work best in the short term. Edward Muhumza, NTV.